Before we start, hit subscribe. If you're into the kind of financial history that actually teaches you something, not the polished textbook nonsense, then stick with this channel. Now let's rewind to the moment the entire American dream dangled over an open grave. The late 1920s looked like a national victory parade. Factories booming, radios buzzing in every living room, cars rolling out like candy. People didn't just believe in prosperity, they treated it like a natural law. The stock market felt like a staircase to heaven, and everyone thought they were climbing it. What most people today never hear is how deep the obsession went. You had barbers recommending stocks between haircuts, office clerks pooling money to strike it rich, farmers who barely understood what a balance sheet was suddenly buying shares on borrowed money. America had never been more certain of its own brilliance. And the fuel behind that confidence was margin, not a little leverage, but a national addiction to debt. You could buy $100 of stock with $10 of your own cash. The other 90? Borrowed. Imagine an entire country gambling with money it didn't have. That's what Wall Street looked like in 1929. Behind the scenes, everything depended on a small circle of powerful bankers who practically ran the country's financial heartbeat. These men had the power to pump oxygen into the markets or choke the entire system in seconds. And in the summer of 1929, they quietly closed the valve. Credit tightened, loans froze, liquidity shrank. But the average American didn't notice anything. Yet. The party lights were still on, even though the generator was dying. The first real tremors came in September. Stocks stopped rising. Big institutional buyers pulled back. The market started drifting sideways, like a boxer wobbling before he hits the floor. But newspapers kept telling people everything was fine.
A natural pause, they called it. They always call it that.
Then came October 24th, Black Thursday. The panic didn't come from numbers on a screen. It came from the sound of people shouting on the trading floor. Prices were collapsing faster than the ticker could print. In fact, the ticker fell so far behind that investors waited hours to learn how much money they'd lost. Some didn't wait. They started selling blindly, terrified the delay meant the end. Here's something almost nobody knows. The crash was temporarily stopped. 5 of the richest, most influential bankers in America locked themselves inside J.P. Morgan's private library and essentially tried to duct tape capitalism back together. They agreed to buy a mountain of safe blue-chip stocks to show the public there was nothing to fear. For a few hours, it worked. Prices stabilized. Reporters exhaled. Panic cooled. But that was like throwing a bucket of water at a forest fire. 5 days later came the real blow. Black Tuesday. 16 million shares traded in a frenzy that felt more like a riot than a market. Crowds packed the streets outside the exchange. Rumors spread faster than facts. People collapsed from stress. The myth about traders jumping out of windows? Newspapers exaggerated it. But what mattered was that everyone believed it. The fear felt real enough to kill. The U.S. economy didn't dip. It didn't correct. It imploded. Within weeks, millions of people saw their life savings vanish. Not shrink, vanish. They trusted banks, and banks had been gambling with their deposits. They trusted the market, and the market had been pumped with hot air. They trusted the government, and the government had no idea what it was doing. The crash didn't destroy wealth. It destroyed the idea that the system was safe. Factories went quiet. Entire industrial towns went dark. People who once worked 6 days a week ended up asking charities for a loaf of bread. That was the beginning of the Great Depression. Not a moment, but a long descent into a world where nothing felt guaranteed. The real pain didn't hit in October. It hit in the months that followed, when the noise faded and the consequences started crawling into every corner of American life. The crash was just the opening shot. What followed was a slow suffocation. Banks began collapsing one by one, like candles being blown out in a dark room. When a bank failed, it didn't just close its doors. It swallowed every dollar its customers had trusted it with. People showed up to withdraw their savings and were told there was nothing left. Not much. Not, come back tomorrow. Nothing. Years of work gone in a single sentence. This wasn't a recession. It was a nationwide identity crisis. Men who once saw themselves as providers felt useless overnight. Factories laid off entire departments in a single afternoon. Trains that once carried steel and goods now carried desperate workers traveling from town to town, hoping someone, somewhere, still needed help. Bread lines stretched for blocks. Children grew up hearing the sound of their parents whispering about bills after midnight. And here's the part history books usually skip. Even during the worst of it, the stock market didn't bottom out until 1932. That's almost 3 years of falling, hope rising, falling again, hope rising, falling again. Like a slow-motion beating. Every rally was a lie. Every headline claiming recovery around the corner was false comfort. People learned not to trust optimism. Another detail they never tell you. Some small towns printed their own currency. Literal paper notes made by local governments because there wasn't enough cash in circulation. Others paid workers in food or clothing instead of money. The economic system didn't just malfunction. It fractured into pieces. And while everyday people fought to survive, Congress finally uncovered what had helped inflate the bubble in the first place. Banks weren't just mismanaging money. They were speculating with deposits, trading with customer savings, and hiding losses behind fake accounting. Imagine losing your family's savings and then finding out the bank was using your money to gamble. That revelation alone nearly tore the country apart. To keep capitalism from self-destructing a second time, the government had to rebuild the rules from scratch. The Glass-Steagall Act separated investment and commercial banking. The FDIC was created to keep people from losing everything in a bank failure. The Securities and Exchange Commission was born to stop the market from turning into a casino. These weren't reforms. They were emergency repair patches on a system that had been seconds away from flatlining. But let's be honest, the crash didn't happen because capitalism is flawed. It happened because people convinced themselves they were smarter than risk. They believed markets couldn't fall. They believed debt wasn't dangerous. They believed nothing bad could happen because nothing bad had happened for a while. And that's always when the ground starts to crack. In 1929, America treated the stock market like a magic machine that only prints money. And when it stopped printing, the illusion collapsed with it. The strange thing? This story isn't old. It's happening in different forms constantly. The technology changes, the slogans change, the assets change, but the psychology is identical. Whether it's dot-com stocks, subprime mortgages, crypto coins, meme stocks, or NFTs, the same pattern repeats because people stay people. That's why the 1929 crash feels familiar even a century later. You don't have to dig deep to see the parallels. The same overconfidence, the same blind spots, the same denial right before the collapse, the same loud voices saying, "This time it's different." But it's never different. Not really. The day capitalism almost died wasn't about markets failing. It was about people forgetting that markets can fail. The crash was a reminder written in blood and dust. Nothing rises forever, and nothing falls without warning. The signs are always there. The only question is whether anyone's paying attention. If you want more stories told honestly, without sugarcoating or fake optimism, hit that subscribe button. This is AINABEKOV Channel, where we dig into the financial past to understand the financial future.
And trust me, the next big story is already forming. Stay close.
Within weeks, millions of people saw their life savings vanish. Not shrink, vanish. They trusted banks, and banks had been gambling with their deposits. They trusted the market, and the market had been pumped with hot air. They trusted the government, and the government had no idea what it was doing. The crash didn't destroy wealth. It destroyed the idea that the system was safe. Factories went quiet. Entire industrial towns went dark. People who once worked 6 days a week ended up asking charities for a loaf of bread. That was the beginning of the Great Depression. Not a moment, but a long descent into a world where nothing felt guaranteed.